the bank.
So, Brett, I would say we've both probably been pretty big budgeters for quite some time now, wouldn't you?
Yeah, I don't think that's a secret to anybody.
No, but even like independently, before we like ever met each other, we budgeted, and then we've been budgeting together now for, I don't know, a lot of years.
Really? I mean, that's what makes our relationship like amazing.
That's right.
Our propensity for budgeting together.
We have annual budget parties. It's really fun. Like, I don't know what other people do for date night. You know, I'm finding out with all of this like quarantine stuff that a lot of people probably live way more exciting lives than we do on a regular basis, because my life honestly doesn't feel like that radically different.
Yeah, I mean, luckily, yeah, we don't have a lot of crazy extracurricular activities and a lot of stuff we continue to do from home.
Yeah, we do a lot from home, which is kind of nice.
We're raging partiers, guys. Woo!
So for your trivia question, Brett, what percentage of Americans have a budget? In 2019.
Yeah, I'm sure this data was easy to collect accurately.
Yeah, and my sources, as I've mentioned, are always super reliable, not just the first random statistic I see on Google.
Definitely
That's
not.
right.
So random statistic would probably say 12%.
67% of Americans had a budget in 2019, down from 70% that had one in 2018.
I really don't believe that number. So.
Yeah, I think maybe that many people like write down a budget, but then like actually sticking to the budget, I would have to say it's like
that's like
12%.
That's like gym membership for New Year's resolution territory.
Yeah, so I actually threw out on my Instagram maybe a week or so ago, and just said, hey, if there's any financial topics you guys want me to cover, let me know. And one of them that somebody asked about that I think is pretty relevant right now is how to budget when your income is reduced.
Okay, that's a very prominent topic right now, so.
Yeah. So I think, you know, as I mentioned, Brett and I do like an annual type of budgeting exercises, but obviously if your income changes, then like now's the time to put your pencil back down to paper and figure out what your budget is, right?
Right, because your budget is ideally goals that have a plan of how you're going to get to those goals attached to it, right? If you're doing it right. And your plan is going to drastically change. Maybe your goals are also going to change, perhaps, if your income is totally misguided halfway through the year, right?
Right, and depending on how much your income gets reduced, you know, whether it's 50% or 80% or whatever it might be, the important thing is that, you know, maybe some of your goals need to get put on the back burner, but you want to make sure that you're covering all of your expenses, right? That's like priority number one. So yeah, with any budget, I kind of view it as different buckets, and I think you've always kind of liked that analogy, style too. But I would say you have like your bare bones expenses of these are the things that I need to live, and then you have like nice to haves, and then you have savings, right?
Because everybody, no matter what your income level is, or even if you're retired and have no income, but pulling from retirement or something like that, everybody has to have got to cover my expenses, right?
Right.
And then it varies with how much discretionary income you have on top of that for how much you get to play around with that. Am I saving for a new boat? Am I just trying to put some money away? Am I trying to pay off debt, right? Like everybody can get a little bit more liquid with that money at that point. But you always have to cover your expenses, job or no job.
Right. So yeah, let's just kind of talk through. Let's say you find out tomorrow that your income is getting cut, you know, let's just say extremely and go in half, right? What do you do? I think the most important thing is to reference your current budget, and I would even color code it. So I would say, okay, everything in blue is like I have to pay this to live, right? So what do I mean by that? You have to pay all of your bills, right? You have to pay your mortgage, you need to pay your phone bill, you need to pay... Now, I'm not including things like cable because I think you could cut cable, but you probably need to keep internet, especially right now when we're working from home.
Right.
Right.
Or finding a new job also requires internet in any circumstance. primarily, right? I mean,
Right.
you could go to the extremes of like only using the library and whatnot, but
Not right now.
Yeah,
So,
but not now.
so I would say, anything that's kind of like a must have. So groceries, but I would say, what's your bare bones grocery expense, right? So like, I'm somebody who, if I have the extra money and I can get some like fancy cheeses and stuff, like I'm going to do that, right? I'm going to sprinkle some Parmesan on my food. But if I don't have that money in my budget, then I'm going like, what is on sale this week? I'm only buying things that are like a pound or $1 a pound or less, right? Like tofu and vegetables and potatoes and beans and rice and eggs. Like I'm focusing on those staples. So, in college, I ate for $25 a week was my grocery budget, and I really didn't go out to eat very often. So that was like all my food.
Right.
And now Brett and I probably spend, much closer to $100 a week, so $50 a week per person. But if we needed to cut that back, we definitely could, right? And so just think about like, especially if you have a family and everything, I get that that can be a little bit trickier. On the bright side, if you have a family, you can really take advantage of bulk cooking, right? So just think about what that number could be. Maybe you have a little bit of wiggle room, maybe you don't. And then just go and identify, okay, so everything I'm highlighting in blue is like a must-have. And then in green, go ahead and say, these are all the things that maybe they're not quite must-haves, but I would really like to keep them in my budget. Perhaps it's like cable or, a little bit extra for groceries or whatever that might be. And then in yellow, go ahead and highlight all of your savings goals. So maybe you're saving for that new boat, maybe you're saving for that new house, maybe you're saving for your kids', college fund, and just kind of color code everything. So then what I'm going to really get you to do is say, okay, for my bare bones expenses, and this doesn't include savings, and it doesn't include those nice to haves, but for my bare bones expenses, do I now have enough income to at least cover that? Because that is question number one, right? Like, can you keep a roof over your head and food on the table?
Yep.
That's like the most important. If you do, good, because now you don't have to like panic and think about, how do I immediately get my income up or my expenses down? Because you can survive, right? You can get through this. Maybe your income's only going to be reduced 50% for a period of time, so you can think about some of those pieces. If your expenses are higher than your new income, now you're going to have to ask yourself, do I have an emergency fund? Right? Because this is what an emergency fund is for.
Right. This exact scenario.
Right. And so if you do have an emergency fund, great. That buys you time. But now you're also going to have to start thinking about, okay, if this is persisting for any period of time, how do I lower my expenses?
Right. And that's the secret. That's the secret to early retirement. That's the secret to living frugally or minimalism principles. That's the secret to happy wife, happy life too sometimes. Sometimes, not always. Right? So if you can train that muscle, like we've said before, right? And get your expenses down in this time, especially, it'll help you now, but it'll also help you from now on too.
Right.
So yeah, that's what we've been talking about for years now on this podcast is like, can we help people optimize and reduce their expenses and like kind of plan for this scenario and build up an emergency fund? And this isn't a time that we want to say like, I told you so to anybody out there. Like this is a tough time for everybody, but this technique and like this information will help you from now on. Or if you haven't lost your job yet, like think about these things and like do this exercise anyway. And like think about, okay, if if something bad does happen to me, this is what I need to do. And can I reduce my expenses? And what are those expenses that I am going to reduce that I can live without? So then and you can just pull the trigger and be like, I'll live with it until that happens. And then boom, this is going to be my plan.
Right. And so, I mean, hopefully you have enough of those like easy expenses to cut out to say, okay, for now, because my income is reduced, I can pause savings and I can pause these like nice to have expenses. Where it gets really tough is when you have baseline fixed expenses that are now greater than your income. And so, again, this is kind of why we've always preached and practice living below your means. And so, one great example, when we take out a mortgage for a house, it is a house that we can afford on what I consider like a reasonable income, not my current income or our current income. Because, we have mentioned before actually that we are expecting a child, and we knew that when we had a kid someday, perhaps one of us would want to be a stay-at-home parent. And so, we're still kind of figuring some of that out, but also, surprise, when you have a kid, even if you decide not to be a stay-at-home parent, daycare is really expensive. Like, really, really expensive. So, you don't, my point being, if Brett and I would have said, yeah, we're just going to like max out our current situation based on our income, then when life changes at all, you have to make big adjustments.
Right. You can only baller lifestyle for so long before life catches up to you, right?
Right.
So because if any bump in the road just happens, then your baller lifestyle is going to overextend your income.
Right. Yeah. And so, when you have a kid, especially where we live in the city, daycare is $2,500 a month. And so now imagine if we would have gotten a mortgage that was $2,500 more expensive. Technically, we could have afforded it on our dual income, but then when we had our kid, we would have been screwed, right?
Right.
And so this is where it's kind of tough, and this is where people really aren't going to like what I have to say. Let's say that you were making like $200,000 a year, and now your income gets cut to $100,000, and you were approved for a mortgage on that baller income, right?
Yeah.
Well, now you might have to face the tough decision of, will I actually be able to get back to that? And this is a real life example because, like, I've known people who have gone through this where you have this sweet, cushy job that pays well, and then there's a recession. This was really common. I saw this happen a lot in, like, the 2008, 2009 time frame. But I could totally see this happening again now, where you go from making $200,000 to $100,000, and it's going to take a long time for you to get back to $200,000, right? Because that was when, like, the economy was, like, in its peak and things were cranking, and, like, businesses just aren't really hiring right now, And so if you need to get another job, like, they might not pay you the same. So this is where it gets tough, because this is where you might have to start thinking, okay, I have an emergency fund. I can keep my current home for 6 months or a year. But after that, if you can't get your income back up to where it was, then you have to make that tough decision of like, okay, I sell the McMansion and I need to like buy something more realistic. And that's what nobody wants to hear. And that's like the really tough component to this like budgeting on a reduced income. But sometimes that's the pill that you have to swallow.
Right. And I mean, we've talked for years about how to prepare for this scenario and living below your means and getting to that point and living off of all of one person's expenses and in a two-person income relationship model and not letting the mortgage company blow it out of the water because they will, right? They want to get you to pay as much for your mortgage as you possibly can or get into the biggest house you can. And, realtors benefit from that. The mortgage company benefits from that. There's a lot of people in a system that are benefiting from like you spending more money, right? That's the consumerism dream, right? Of America is like the more money you spend, the more money other people make. So everybody tries to get you to spend as much as possible in the booming economy. And then, now we flip that upside down. So how do we tighten those strings if you are in a tough situation and are kind of like, what do I do now, right? I didn't prepare for this adequately, and now my pants are on fire, right? Mm-hmm. So what other tips are we looking at?
Yeah, so I mean, one of the big things is take advantage of the programs that are out there. We talked about it in 2 of our episodes recently that are both titled like COVID Relief Update 1 and 2. Made that pretty transparent. But, things like being able to defer your mortgage or being able to defer student loan payments right now, those are all going to help you build up an emergency fund or help you, if you do have this reduced income, figure out which expenses can I kind of not have right now on my plate. So that's really number one, is just the biggest step, and I think the step that's always the hardest, is you got to sit down and put pen to paper and write out what all of your expenses are and how much income you have coming in and figure out what you can and can't keep on that plate.
Right. And this is a great time to look at even if you don't get rid of stuff like cable or internet or whatever, look at reducing your package, right? Dropping the cost in half. Or if you're on Verizon, there's a 110% chance that you can get your phone bill to be cheaper by switching to other services that are just going to provide just as good of a service.
Yeah,
right?
like Google Fi.
Yeah, so Google Fi, right? Now's the time to like dip into that and like take a look and give it a try, because it's like 20% of the cost for like the exact same quality.
Right. So, yeah, Google Fi is a great example. Even honestly, just calling Comcast, if you haven't talked to them, or any internet provider that you might have, if you haven't talked to them in a while and you call them, you can probably get your bill lowered, because that's the game, right? And we all hate the game, but you play the game. So you can do that. You know, your utilities, I know a lot of people are like, oh, electric is just electric and I pay what I pay, but Brett can attest to the fact that when we lived in a house, I was a little crazy and I measured all of our kilowatt usage and I really understood where my energy was coming from. And this might sound crazy to all of you listeners, but avoiding using your dryer can actually save you a lot on your energy bill, right? There's like certain appliances in your house that just eat up energy. Right. Vampire load is another huge thing. Like I just would, put everything into a power strip, like by the TV. So the TV, the gaming system, whatever. And then at night I would turn that power strip off. And like just the little habits like that ended up saving us a lot of money on our electric bill.
Right. And I thought Angela was actually crazy for doing this for so long, but it did. It ended up saving us like a bunch of money. The TV was drawing like a ton of power from the wall when it was off, and a bunch of other stuff was. Obviously, you're not going to turn off like your fridge
right.
or other like big major appliances when you're not using like the stove. I mean, that's another good one because that draws a ton from the wall too. But just things that don't matter, right? Or put things on a bunch of power strips, like plug in all your lamps on a power strip and then just turn that off.
Right.
If you got any of those laying around.
And honestly, we just started using a drying rack instead of a dryer, and like, we have no problem with that model.
Yeah.
It's pretty easy. So there are areas where you can still reduce those expenses, even if you can't eliminate them. Groceries, we've talked about before on the podcast, but getting your food costs down can be super critical and helpful in a time like this. So those bare bones expenses, I know Budget Bites is a really good website that has cheap meals. If you're looking for cheap, easy meals and you like Brett and I, you can go check out our Frugality YouTube channel. And we put some cool stuff up there that's like pretty cheap and inexpensive to make. So there are some really good resources out there to help get your food bills down. Streaming services, I feel like maybe it's just me, but it feels like it's getting a little crazy. It feels like it's getting a little too cable-y. Like you have Netflix, you have Hulu, you have Disney Plus, you have this other new one that came out that all of their content is like 10 minutes or less or
Quibi
something.
Yeah,
Quibi. And then you have, I mean, it's just, we're getting flooded. HBO Go, right? Like I could keep going. And they're all like, everyone's like, oh yeah, it's not that expensive. It's like around $10 a month. But when they're all $10 a month, all of a sudden you're paying like $50 for streaming.
So the best thing you can do is just hit up all the free trial, like cut all of the payments for all the services and have them not renew at the very least. And then just switch to using free trials only. It might take you an extra 5 minutes to create accounts for emails or something, but right, you can get away with most of that for most of these services.
Right. Or if you don't want to do the free trial thing, another thing Brett and I do pretty successfully is just turn it on and off as we need it.
Yep.
So, like if you pay for 7 different streaming services a month, how many are you actually watching? And I don't want the lazy answer of like, oh, but I watch this show on this in the morning and then at night I watch this show. No, there's plenty of content on all of them to stream unlimited content for the rest of your life. So pick one and say, okay, for April, we're going to have Netflix. And then in May, we'll move to Hulu. And we're going to like watch the shows that we want to watch and just live with it.
Yep.
Mm-hmm.
Or switch to YouTube and like learn a new trait of some kind, right? There's like tons of free content and people out there. And especially now, people got nothing else to do sitting around at home and they just like love putting content out there. So
yeah, genuinely, Brett and I haven't actually paid for a streaming service in quite a few months now because we watch YouTube and we watch a lot of like home building shows. We watch a lot of cooking shows. Mostly cooking shows, and honestly, I don't really miss anything else. And so, sometimes we turn Netflix back on and we binge watch Tiger King with the rest of the world. But I don't actually feel like I'm missing anything by not having any of these services. So give it a shot. YouTube has a lot of great free content. We don't mean YouTube TV when we're saying this, because that's its own thing.
Right. That is also a pay-for service, and we did have experience with that, and it wasn't the best in our opinion. So give it a try if you like it, but yeah, not my favorite service.
Yeah, and there's no sports on right now, so you can't tell me that you need the sports channel.
Right, yeah, that was their big play. It was like, we have all the sports networks, and then, yeah, there's no more sports. But yeah, regular YouTube, free service, great. Or also make content, right? Go ahead and like put your name out there. You won't be popular in your first 10 videos, but, it might pick up. You might, really like it and find it as a cool hobby.
Exactly. So yeah, those are some areas where you can reduce expenses. And, right now, entertainment budgets and stuff like that are pretty naturally reduced to zero, at least for us, because we're still under a shelter in place. So there is like no going out to eat, and there's no going to a concert. So
yeah, this is the lowest our credit card's like ever been, I think.
Yeah. So, just find free things to do that are enjoyable. So I know for me, that can also be downloading like my library app. So I use Libby, I've used Hoopla. I recommend both of those. And you can get books, you can get ebooks, and you can get movies. So there were several movies, Brett, that we've watched this year on like a free library app.
Yeah, it's free to get the card, it's free to get your library card, and they have tons of services that you can go after. So I know you can't physically go there now and get it, but if you already have it, then you're good to go.
You can apply for digital cards at many libraries right now,
too. So look into that too. Yeah, and give that a try. Because there's a lot of great content out there. They partner with tons of services that have great content as well. There's a huge library of stuff out there.
Yeah.
A lot of good learning resources for kids too.
Well, and like Mango Language, a lot of libraries partner with. So now's a great time to learn a new language. You can, I know you have that guitar in the closet that's collecting dust because everybody has one. So you can learn an instrument, you can learn a language, you could, just start playing games and card games, right?
Yeah, I heard the kid next door playing the trombone the other night through his walls. So I'm sure his parents were real happy about it. But always good to pick up that hobby.
So yeah, I guess kind of just to start recapping here, our biggest advice is go through line by line and figure out what expenses you can eliminate right off the bat and what expenses you feel like you can reduce. And honestly, we've provided a lot of content over the years on how to reduce different line items. I know one other one right off the top of my head is car and home insurance. If you haven't called your insurance agent in a while or shopped around for your homeowner's insurance or your auto insurance, chances are that you could save literally hundreds of dollars a year just by taking 20 minutes to call around and get some quotes.
Yeah, like there's no doubt that can happen. If you haven't done it, you will definitely get a better deal than what you have now. And talking to your landlord if you're in a rental scenario, also something that could be a good thing for you, because nobody wants to be in a situation where you just abruptly no longer have the ability to pay rent anymore. You don't want to be in that situation. They don't want to be in that situation. So like talking with them up front about what the situation is really helps. And especially in this time frame, there's a low chance that your landlord may just completely, forgive some of these payments, or, they'll definitely be willing to help like work with you during the time frame to maybe reduce payments for now and like come out with a payment plan for later, right, to like fix things together. But it's not a guarantee, but it's worth asking about if you are like kind of at the wit's end and that's your largest expense, right?
Yeah, and I would definitely say that is one of those situations where being proactive as landlords ourselves, I know we've been pretty proactive checking in on our tenants, but it is so appreciated in those situations where your income changes if you just reach out ahead of time or as soon as and you say, hey, I actually sat down and I was looking at my budget and I don't think I'm going to be able to make the full rent amount, but, if we reduced my rent by 10% a month, then I could continue paying it. And some landlords might be like, oh, that's, not going to work for me. But some might be like, hey, I get it. I don't want to deal with vacancy right now either. So sure, I'll take that for now, and let's figure out a way to make this up going forward. You know?
Yeah. And come to them with a plan is the best course of action, right? Because they don't want to just like on the spot, if they hadn't been thinking about it, like just come up with a plan that you have to adhere to on the spot, right? That is not going to benefit you, right? Come prepared, come with a scenario that you think is fair and that works for everybody. And then, it makes it feel like you had your ducks together, right? And you've been thinking about this, and like you're somebody that can be trusted with this information, and then you're not going to like cheap out on the payments later, right? And just kind of like try and get away with it, right? So it just involves a lot of trust in that scenario, right? Or imbues a lot of trust.
And in a worst case scenario too, there are resources right now. Like I know the government has made it a lot easier to take money out of your 401k as a loan or a hardship withdrawal. And if you do a hardship withdrawal instead of the normal, I think it's like 30 or 60 days you have to pay it back. I think they're saying that you might have up to 3 years. As always, check with your, current plan to confirm that. But that's kind of the news I was seeing coming out. So I say all that to say, if you really need some money, let's say you're like, I would be fine if I just like didn't have my car payment anymore and I owe $5,000 left on my car. Well, maybe it's a good idea to take out, a $5,000 loan from your 401k or hardship withdrawal to kind of get float the gap, right? And eliminate that line item from your expenses for now.
Right. And again, those are very temporary solutions where like, or you're very confident you can get back, recoup those expenses and put them back from that loan relatively quickly.
Right.
It's not like oops, I'm out of money. Oops, I lost my job. I'm just going to like pull, $50,000 out of my 401k as a loan, and hopefully someday I pay it back, right? Like that will really hurt you in the long run if you do that. So, but it is a temporary thing. It can be a great thing if you keep it very short, and just need to float by for like a month or two.
Mm-hmm. And I mean, the big thing is getting your expenses under control and figuring all of that out. But there are tools out there to help you with that. I will say another thing is if you do have a auto loan or student loans or a mortgage and you're like, oh, if only my payments were a couple $100s a month lower, I would be in a much better position. Now would be a really good time to refinance. I actually know of like 4 friends who have refinanced their home in the last week.
Right.
Alone.
And another one that needs to, Jim.
Not to mention any names. So yeah, we already kind of talked about if you're renting, talk to your landlord. If you're in a mortgage, sure, there are these programs where you can defer some mortgage payments for a bit. But let's say, you're looking at it and you're like, oh, if my mortgage was just a little bit lower, I'd be fine for, a long time. Then go ahead and refinance because rates are at a all-time low. I will say, there might be a few more hoops to jump through with refinancing because mortgage companies do a lot of due diligence. They're going to be checking your income, and they always do an employment verification check, but they are now taking that one step further to like confirm with the company that your job will not be affected due to the COVID pandemic.
Right. Or at least hasn't been anyway.
Mm-hmm. So, keep that in mind. If you have a reduced income amount, you might not get the same approval rating that you had, but it's worth a shot because rates are really low. And especially, if your rates are 4% or higher, I would say I would definitely look into it. The general rule of thumb is if you can refinance and have your interest rate drop by 1% or more, it is totally worth doing. And I know somebody I talked to just last week said that their interest rate actually dropped 1.75%. Yeah. So that's crazy, right?
Sick deals, yeah.
All right, Brett. Well, as somebody who's been budgeting for, 20 some years now, do you have any other advice that you'd give somebody who's trying to figure out all of this with a reduced income?
I'd say, again, this is the right time to use your emergency fund. I know, especially for me, even if I got into any precarious situations, I just built up a defense to like not using that fund. But like it can be hard to remember that it's okay to use it sometimes, right? So again, if you do lose your job, that is absolutely the time. Tap into your emergency fund, and hopefully it's been built up enough over the years that you can float 6 months or 3 to 6 months kind of a time frame and still be okay. But again, like we said, helping to reduce your expenses is just going to make that emergency fund last even longer, right? A lot of people affected by losing their job right now are not going to benefit from the stimulus package that is coming into play necessarily, meaning you're not going to get your like $1,200 a person kind of payout. And we talked about this before in a previous episode, right? If you made enough money last year or the last time you filed your taxes, right, on that baller income, you don't qualify for this payment this year, but you will like next tax season, right? So for your 2020 taxes that are going to be in like next April, not this year, then you'll get a credit on your taxes for that. So not great news for that now, but looking forward to that on the horizon.
But if you are unemployed, and even if you were like a business owner, like if you had your own business or anything like that, do file for unemployment. They did make it much easier to qualify for that. I know wait times, depending on what state you live in, can be a little bit crazy to get an answer back and to get everything kind of moving, but that's totally something that can provide you some relief right now.
Right, and that varies by state. So if you've heard some horror stories of it being a terrible process, we've heard other stories of it being like a 5-minute online process and no problems.
Yeah, we've literally heard from somebody who it was like a 5-minute process, and I have another friend who is going on 2 weeks of waiting to hear back from the unemployment office after submitting paperwork online.
Right, for different states.
Yeah, different states for different folks, I guess. But that's definitely something that you should look into and tap into that resource as well, because as Brett mentioned, those stimulus checks, they have already been sent out if you got direct deposit. If you did not get direct deposit and you're getting a printed check, I hear that they're being delayed because somebody didn't sign them. So they should be getting mailed out soon here, I think.
Right. And we did one episode before, quite a while ago probably, about talking about different ways to like make passive income online while rather than watching TV, and things we've talked about before. Like we use Prolific, which is like a survey tool online. There's a bunch of those. I think this one's not taking new people this time, but Prolific's great. Amazon Mechanical Turk is another one. There's where you just go and like click on potatoes and answer questions and stuff, and they pay you like a couple cents per minute, basically. But you can make $40-$50 a week just doing stuff just while you're sitting there doing nothing. It's great during a pandemic time, especially if you have kids, and just make them do it. But it's great to, if you don't have anything else going on and you lose your job and you need like an extra $50 to $100 a month, just from, not a whole lot of time commitment. It's another thing to look into as well, to make a bunch of passive income online.
Yeah, exactly. That's a great point, Brett. And, I've also seen a lot of companies like Amazon or different banks or, especially mortgage companies, because they are refinancing so many people right now, they are actually looking for like stay-at-home call center representatives. So if you're, I hate being on the phone, but sometimes you got to do what you got to do. So if that could fit, your skill set, there's also some jobs available for that. And obviously, also, I know grocery stores are really slammed right now. So, like, I know that, like, Walmart has been hiring like crazy, too. So there are some jobs out there. Again, to the point that I made earlier, like, they're not going to very likely replace your, like, baller status if you're trying to cover really large expenses. But if you get your expenses down to a more normal amount, and then you can get some money coming in, and you have that emergency fund built up that we've talked about, you're just going to really help kind of cushion things from all sides, right? So increasing your income is one area that provides a lot of value. Decreasing expenses, you get a ton of bang for your buck for as well. So the more that you can kind of do both of those at the same time, the more you just set yourself up to be in a really good position.
Right. And then there's a lot of easy, popular options out there, like, taking out a bunch more debt and, doing hardship, large hardship loans, pulling all the money out of your 401k, right? There's some pretty obvious and popular answers that a lot of large spokespeople have been talking, popular spokespeople have been talking about for years as options. Like if bad things happen to you, if you're out of work, and you just want to avoid as many of those as you can now, right? Because you can get yourself into trouble long term by doing some of those things, right? So the name of the game is to try and get by as long as you can until you get in a little bit more stabilized position without taking as many of those long-term penalties as you can, right?
Yeah, and I would say this is the time where keeping that level head and staying logical instead of emotional can be your best friend, because the emotional response is, I need to fix this now and I don't care what it takes because it's just stressing me out. And you take a hardship withdrawal and you take out, you drain your 401k and you're like, great, I got this money, now I can pay my mortgage and my car and whatever. But then in 6 months, when things might not be looking any rosier, you're still in a bad financial spot and you're still stressed, and this whole like tornado just kept spinning, right? Mm-hmm. Where if you can hit pause for a second and you can think, how much do I need? So I think I've mentioned this scene like 15 times in the last 2 weeks, but in It's a Wonderful Life, there's this bank run scene and George is asking people like, how much money do you need? And one guy's like, I need all my money. And this other lady's like, I only need $11 to buy groceries for my kids this week. And be that lady, right? Like take a step back and say, how much do I really need? Not how much to pay all of my bills for the next 12 months without reducing my lifestyle. Think about what cuts can I make and what can I sacrifice and what reduced amount do I really need? And then figure out a plan to get that amount of money. And like I said, if you can supplement it with maybe you get unemployment coming in, maybe you still have some income coming in as well. Maybe it's not 100%, but maybe it's 60%. Then you're going to, in 6 months, you're going to be in a much better position. And more importantly, in 20 years, when you go to retire, you're going to be able to do it.
Right. Stick to the plan, right?
Right. And reevaluate the plan when you need to.
Exactly. So we'll leave you guys with one more story here. There's a story in times like this that I like to think about, and it's from Adam Savage, who used to be the host of Mythbusters. And he said that one time they were filming an episode, and it was where he was trapped in a car that was sinking into a lake, right? So they intentionally submerged the car underwater, and they had to see like if he could get his seatbelt undone and if he could like break out of the car. And something went wrong in the test, and when they were doing it live, and he couldn't get his seatbelt undone, and he couldn't reach for the knife that was like stuck to his leg. He couldn't reach that either at the time that it happened. So it was like a perfect storm of bad mistakes that took place. So he was literally drowning in the car, and like nobody knew that was happening. But in that panic scenario, if he would have freaked out at that time, he would have definitely died. But because he had previous underwater like scuba training, and he was, he had been through some exercises in the past, and he had been thinking about this stuff in advance, he was able to stay calm in that scenario, and he was able to still logically think through the problem as it was happening, and he was able to like get the seatbelt loose and get out of the car and survived that experience. So I think that was like the most deadly show that they ever had, or whatever, or the riskiest show that they ever had of all the stuff that they blew up. So everybody just don't panic, keep calm, right, and stay safe.
And go listen to some of our old episodes about stoicism if you want to figure out how to stay calm in these situations, because I know that's what's really helped me is studying, Stoic philosophy and keeping my head right. And man, it's been kind of some crazy times these last 2 months, but staying calm has been invaluable. So
that's right. All right. Thanks, everybody.
Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.